I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, big tech bonanza. Next week offers earnings for Apple, Amazon, Alphabet, and Facebook. We'll tee it all up with one of the most watched analysts on the street, Dan Ives of Wedbush. Plus, why one tech CEO felt compelled to email 10 million customers, urging them to vote for Joe Biden. We're just 10 days away from the presidential election, and last-ditch support efforts for both candidates moving at breakneck speed. And digital gold. Cryptocurrency king Mike Novogratz on demand and the rising prices for Bitcoin. He says you can call crypto a lot of things, but don't call it a currency just yet. Those stories in a moment. First, U.S. stocks rising after the Trump administration resuscitated hopes for a spending package. The Nasdaq had a modest gain. Let's get the latest from our Abigail Doolittle in New York. Abigail, walk us through the day.
Not surprisingly, Emily, another choppy day. We have not really had one day this week where we haven't had stocks up and down throughout the day. In fact, there hasn't been one day where that's been the case. And most of the days have really seen lots of intraday whipsaws, telling you that investors are pretty nervous. You know, some uncertainty is going on. The S&P 500 at the end of the day, after spending most of the day down, did manage to eke out a small gain, up about 0.3%. There were only two down sectors, energy and then tech. Not surprisingly, tech being weighed on by Intel. The SOX also one of the only indexes on the day to fall on that Intel weakness. And as we talked about yesterday, their data center sales for the third quarter, very disappointing, missing, down 10% year over year, and the guidance was tepid as well. So, you know, at the end of the day, again, it was a choppy week. Investors dealing with lots of different uncertainty. From a macro standpoint, one piece of the uncertainty, rising yields, that has been pressuring stocks. So the first down week for many of the indexes in quite some time.
Meantime, you know, obviously we saw Intel shares drag down. It was a down day for a lot of indices this month. Is this a concern?
You know, so this week it is a bit of a concern because we had the month of August where you had many, many weeks were up. So we had that huge bullish month, and then September, the exact opposite. So there is a concern that maybe we're getting into some sort of range. That will only happen if next week is also down. It's too early to say, but as you were mentioning, lots of big earnings reports coming out this coming week. And it's really interesting the split we saw this week between some of those big names. So Alphabet, as you and I have been following all week, higher after that landmark lawsuit has come out, a bit of an overhang removed as investors know what they're dealing with. So that stock having its best week in about 2 months. Facebook also having its best month, or best week, excuse me, since the end of August, in sympathy perhaps with Snap and optimism that social media this year is strong. On the other hand, Apple and Amazon also reporting this week, both of those stocks down. And Amazon, as we have talked about a couple times, really stands out to me because it started to trade poorly the first day of their two-day Prime event and then into the earnings report. So sometimes when you see a stock trade that way from what should be a bullish event into the earnings report, it tells you someone somewhere knows something. So maybe there's going to be some sort of a hiccup there, or perhaps it's just investors getting a little bit nervous. But in any case, that divergent picture between those FANG stocks really stands out. But overall, it was a down week, not just for those FANG stocks, but also actually the FANG index up slightly for tech stocks, I should say, and the SOX, Emily, the chip index, down for the first time in 6 weeks. So, yeah, we'll have to see what next week brings. Probably some more choppy trading, and there's that SOX index down of the week.
They could be in for a ride next week, especially the big tech ones. We've got Zuckerberg, Dorsey, Pichai buying on Capitol Hill, and all of the big tech companies reporting results. So we will be all over that. Bloomberg's Abigail Doolittle, thank you as always. Have a wonderful weekend. And speaking of big tech season, earnings underway coming up next week with Apple, Facebook, Amazon, Alphabet, and Twitter, all set to report next week. Joining us to discuss, Dan Ives of Wedbush Securities. Dan, always interested in your predictions ahead of a big week like this. What are you expecting?
Look, it's a seminal week for tech stocks, and in my opinion, fundamentally, I think you're going to see significant outperformance, and I view it as putting more fuel in the rally going into year-end, led by FANG names, especially when you look at Amazon and Apple front and center. And I just think the trends that we're seeing are being accelerated in the COVID backdrop, and it's something where FANG names disproportionately benefit. That's why I still think tech stocks 10 to 15% higher between now and year end.
So let's talk about the testimony first, because that's going to come earlier in the week. First, we're going to see Zuckerberg, Dorsey, and Pichai on Capitol Hill on issues surrounding Section 230. Are you expecting much of an impact to the stock there?
I don't think it's necessarily an impact to the stock, but I do think it lays the ground for what we're going to see over the coming year on 230 and broader in this Beltway versus big tech UFC battle. And I think 230 is really at the center of it, especially on the social media side. It's something investors are focused on from a tone and direction, but this is going to be a continued protracted battle. But I do think it maybe shows some tea leaves in terms of where this is heading, especially in the midst of what might be the most important week for tech earnings in the last 6 months.
Let's talk about Alphabet in particular on the back of the big news that the DOJ is suing Alphabet over antitrust concerns. This is the biggest antitrust action in this country in possibly a century, Dan. How much of a concern is this to Alphabet shareholders?
Yeah, and I know you were talking about before in terms of the stock. Obviously, investors view this as a contained risk and view it something that's being protracted over the coming years. But I do believe a lot of it depends on if you start to see a blue wave and what ultimately antitrust momentum looks like, over the next year. I think it's something where it's first now it's Alphabet and then Google, is obviously right now, but it could be Facebook and others right around the corner. I think investors view it as a contained risk. But I do think as we get into the next 6 to 12 months, it does start to become something that I think the street starts to factor in from a risk profile, especially when it comes to Alphabet.
Speaking of risk, we're days away from the election now. All of these companies will report before the election. Do you see the administration, Trump remaining in office, or a change in administration meaning a big change for these companies, or no?
Well, I think regardless of who's sitting in 1600 Pennsylvania Avenue, we still think tech stocks are up 10 to 15% higher. I do believe, on one hand, a blue wave from an antitrust perspective could be viewed negative for big tech. On the other hand, in terms of just overall from a spending environment, from a consumer and stimulus, it's something that, could be a benefit. So that's why, to me, when it comes to tech, in some ways it was a safety blanket in terms of FANG names during the storm. I think on the other side of this, on the economic rebound, even through the election, I think you're going to see a lot of these tech names go higher because there's a scarcity of growth names. There's obviously a lot of volatility. But I think what we're going to see this week is that it's really a golden age for technology. And I think that's something, even when you look at Apple going to what I believe is their strongest product cycle in the last decade in terms of iPhone 12, 5G.
So let's talk about Apple and Amazon, of course, heading into the holiday season, an unprecedented holiday season. Do you think we're going to see any surprises?
Well, I think when it comes to Amazon, potentially the $100 billion quarter, which is a key threshold, I think the big focus is going to be around the December quarter in terms of, what holiday season potentially looks like for them. And another thing is really going to be the cloud, and we'll get this from Microsoft as well. Cloud continues to be such a massive theme on the enterprise in terms of this shift. AWS is a core beneficiary as well as Azure. And I think that's going to be key, especially for enterprise and software as a barometer to what we're seeing in terms of spending. When it comes to Apple, it's really around Cook just talking about early demand on iPhone 12. And like we talked about this week, we believe units are up almost 10 to 12% more than our expectations 4 weeks ago. And I think that just speaks to, what I believe is going to be a super cycle for Apple over the next 6 to 9 months.
And, I want to end on Facebook because the election, we've talked about it being Facebook's biggest test perhaps ever. If it goes well, what does that mean for Facebook? If it goes horribly and Facebook ends up being partly to blame, what's the impact?
Well, I think it would be a major black eye for Zuckerberg and Facebook to have some other silver bullet come through on this election. I think obviously the company has the guardrails to try and make sure that doesn't happen. On the other hand, if it goes smooth, I think it's important in terms of not just from a PR perspective, but even some of the heat that they're getting within the Beltway. And this is really, it's a fork in the road situation for Facebook going into the election. I think Zuckerberg and everyone understands that. And this is something where it's a time for them to shine, but it's also very important to make sure another black eye for them would be, a very tough pill for investors to swallow.
All right. Dan Ives of Wedbush. We'll be following all of this next week. See if you're right. Thanks for joining us, as always. Coming up, the CEO of Expensify sent a politically motivating email to his customers, but was it a good move? We'll talk to David Barrett, CEO of the company, next. This is Bloomberg. Anything less than a vote for Joe Biden is a vote against democracy. Nope, that's not an email from the Biden campaign. It's from the CEO of Expensify. And it went out today to 10 million customers, taking a highly politicized stand in a last-ditch effort to sway votes in the upcoming election. They say never mix business with pleasure. But what about business and politics? The CEO of Expensify, a software company known for handling travel and expenses, David Barrett, joins us now. David, they generally say don't mix business and politics either. So why take a stand like this so publicly, knowing that many of your customers probably don't agree?
Well, I think actually most people do agree with the core of the message, and that is democracy is important, it's worth protecting, and vote suppression is a bad thing. I think that the only part of disagreement is what to do about that. But I think the core of it is, these are pretty straightforward statements that have pretty wide appeal.
It's been a few hours now since you sent this out. What has been the reaction? Have you lost or gained any customers?
I mean, it's pretty early to say, but I'm sure it's going to be a mix of both. But I fundamentally believe that good brands are built upon having clear values and then standing up for those values. And so I think going forward, if people realize that Expensify has long been built on sort of a platform of fairness internally and externally and so forth. So we don't just say it, but we really believe it and we're willing to put sort of our efforts behind it, even when it can be, controversial.
That said, I understand there was pushback internally. Have you lost or gained any employees? And tell me about the conversations you've been having on the inside.
Well, I mean, it can seem sort of out of the blue if you're not really been tracking Expensify closely, but this isn't the first time we've sort of taken a stance on a social issue. I mean, we launched a nonprofit earlier this year called Expensify.org, and we've been reimbursing SNAP recipients for groceries bought with their EBT card. We're an expense reporting company. We do reimbursements, so it's something that we can do. And so we've been helping people out to sort of weather this COVID crisis for months now, help thousands of families. And so we've already kind of dipped our toes into trying to help in the real world. Likewise, when the tragedy of George Floyd's murder and the BLM movement exploded around the nation, and our major office is in Portland. I'm in Portland, and so the heart of the BLM movement happened in our backyard, basically. And so we've been engaging behind the scenes with BLM leaders and trying to figure out, it's like, how can we help? How can we elevate your voice? And I think we've really been struck by how the huge gap between how it's reported on the outside and what we see firsthand. And so we know the BLM leaders here in Portland are incredibly against violence. They disavow Antifa, but that just never makes it through. So when we came to this message, it wasn't like we had never had any experience dealing with any complicated issues around or even talking with customers about those complicated issues. We just realized this is something that is near and dear to our hearts. We care about fairness. We care about democracy. And we just feel that, what's that saying? All good people, all evil needs is for good people to stand aside. And we just thought we shouldn't stand aside. We think we should talk about something that's important. And even if it's controversial, we should get the message out as much as we can.
But I understand there was some debate internally about whether or not this was a good idea. Sure. How did you navigate that? I mean, you are competing against giants like SAP, and there's concern about putting your company at risk, regardless of what you believe.
Sure. I mean, I think so Expensify is a pretty diverse place. We have people across the whole political spectrum. And we work very hard to create an inclusive environment for everyone. But inclusive doesn't mean that you only do the lowest common denominator. It doesn't mean that you just avoid or shy away from difficult conversations. That's not inclusiveness. That's just suppression of thought. And so we say, no, let's be inclusive of all of the ideas in the company, even if some of them have disagreements. And so we created a process internally because, again, Expensify is a weird company in a number of ways, but one of which is we don't really have any internal reporting structure. Like no one reports to anyone else. Everyone's responsible for their own time and they can choose how to spend it. But we all follow fair processes that indicate if you're going to do something, you have to share what you're going to do and talk about it. And so I went into our Slack room. It's this what's next room. And in the what's next room, the rule is you post a problem that you want to solve and a vague summary of how you want to solve it. And so my problem, democracy is unfolding before our very eyes, and it's going to devastate our business economy. And solution is we need to do what we can to encourage the voting of Biden to get Trump out of office.
Meantime, the election is one thing. Where we go over the next several years is another. Coinbase CEO Brian Armstrong put out a memo saying the company would no longer take on or debate political causes not directly tied to cryptocurrency. And there are CEOs lining up on either sides of this debate. Are you concerned that there's a growing divide in business between companies that care or say they care about social causes and companies that don't?
I don't know if there's a divide. That would imply there's some sort of competition to endorse social causes, which I think that there's some companies that are willing to take the stand and some that aren't. I mean, I think that the idea that politics and business aren't linked, I think is kind of a fiction. Like business is people. Corporations is people trying to get shit done. And so I think the idea that a corporation can't, the voices of the company can't speak, I think is kind of preposterous. I think that either the company is comfortable with the status quo or they don't like the status quo and they're too cowardly to change it. And so I think that we want courageous companies that are willing to stand up and actually speak the minds of their employees, speak the minds of the company and say, look, we want change when we care about this.
All right. Well, you certainly took a stand today. CEO of Expensify, David Barrett, thanks so much for joining us today and explaining your position. Coming up, while live in-person events have been de rigueur for fine art viewing and bidding, the pandemic has sent online sales and auctions soaring. One company is embracing this shift. We're going to hear from Artsy next. This is Bloomberg. As the pandemic has upended in-person events, one of Paris's biggest art weeks has gone online in an exclusive partnership with Artsy, an online marketplace for fine art. Collectors can view the virtual art fair called Le Paris using augmented reality on the Artsy app and buy artwork from over 200 galleries. Online sales have been part of the business for years, but is now the time for the art industry to really embrace it? Joining us now for more, Dustin Kim, Chief Revenue Officer at Artsy and the latest guest in our Retail Transformed series. So talk to us about the Le Paris partnership. What is the level of engagement that you're seeing compared to a normal, let's say, event?
Sure. Well, thanks for having me. In terms of the partnership, I'll just start with the two of us. Artsy is the leading online marketplace for buying and selling fine art. And Le Paris is a newly formed art week in Paris. As you noted, this partnership came about after the cancellation of FIAC. The art world in general, I think, has been quite concerned that with the cancellation of fairs like FIAC, there's a potential void for galleries and art businesses who rely on the international audience, foot traffic, and sales momentum that a fair creates. And so the French Gallery Association very quickly responded after the cancellation with the formation of Le Paris. And then we at Artsy immediately reached out to offer online support for this important moment. So with our platform, we've built a customized online experience surrounding the full programming of the Art Week in Paris. We've got content that ranges from interactive maps, if you are fortunate enough to be able to make it in person. We've got curated highlights and reading for those to explore online. We've got over 2,300 artworks from over 220 participating galleries. And we're promoting all of this artwork out to our nearly 2 million users. And we just launched this.
Dustin, I'm curious, what kind of changes in demand have you seen since the pandemic? Because I wonder if this is an opportunity to reach more customers, though it's a non-traditional way.
Yeah, absolutely. The pandemic has accelerated a trend that was already occurring in the art market, which is a shift towards online. Home is more important than ever. Art provides an important source of inspiration from people as they're working from home, spending more time at home. That has driven up demand for art and the desire to purchase that art online with ease. That it has then in turn forced galleries to become digitally native, virtually overnight. And so massive acceleration of a trend that's been slowly underway for years. And what an online platform like Artsy
does. Do you think the shift to online selling and buying will live on post-pandemic in the new normal? Like, do you think how we buy and discover art has now fundamentally changed for good?
I do. Once industries have made the shift online, my personal belief is that it holds. As I noted, it's an acceleration of a trend that was underway. People nowadays they're stretched thin. They are busier than ever. Even if you have the budget to spend millions of dollars on art online, you don't necessarily have the time to travel around the world and go gallery to gallery in search of artworks that you love. And we've got younger generations of people that are buying cars online, they're buying homes online, they're buying diamonds online, and they expect to be able to go to a single source, explore the world's art, and purchase it online with ease.
All right. Well, certainly fascinating to see how you and the industry have evolved, and we'll continue to watch and look at the Le Paris partnership as it plays out. Artsy Chief Revenue Officer Dustin Kim there. Thank you so much for joining us. All right, coming up, from gaming to streaming, we get to the 2021 outlook for various tech and media sectors and what's best positioned out of the pandemic. That is next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Activate's tech and media predictions are out, looking at the biggest trends we'll see through the new year. From video streaming to gaming and ads, the outlook takes a look at the media areas that have been hit hard by the pandemic and those that will stay on top. With us now, Activate co-founder and CEO Michael Wolf about what to expect in 2021. Michael, good to have you back on the show.
So we know behavior is going to be an amazing year for tech and media.
We are all online more. I'm doing this show live from my basement, but how much of this is a permanent shift in behavior?
A lot of it is, what's happened is people have gotten to be very comfortable with a lot of digital activities at home. If you think about it, working from home, video conferencing, telemedicine, exercise, so many of these activities, we've seen most of these activities have doubled during this short period of time. But there's a bunch of other stuff that's happened. Grocery, online grocery, it's advanced 5 years and 5 months. So, and there's so many, and there's a lot of other activities. We see the average American has dramatically increased their time spent with technology and media. And we think that's going to be, that curve is shifted up, and it's going to continue to at that level. It's not going to go back down.
How will this holiday season be different than any other holiday season?
There are people who are wondering what's going to happen. We believe that we're going to see a great deal more e-commerce shopping, and it's not just going to be from Amazon and traditional e-commerce companies. What's happened during this period is that the great majority, over 50% of consumers, have decided during this period of time that they're going to start shopping from another retailer, and most of them in addition to their core. So I think the beneficiaries are going to be people like Walmart, Target, Kroger, others, Wayfair, and others who really weren't in that picture. I think that we're going to see a huge amount of business going their way. It's not just going to be one company. And of course, the marketplaces, Etsy and eBay, a huge amount of shopping there, not just in the case of eBay, not just for things that are peer-to-peer, but a lot of them for large-scale items like electronics, of course, clothing, which would have been bought somewhere else. So in general, this is going to be different from anything else, but it's going to be the start of a trend. It's not going to go back to the way it once was before.
Now, how we watch stuff is also changing, and it could have been a moment for Quibi, the short form mobile video content creation shop that just went under. Why didn't that succeed, and what does it mean?
I think it didn't succeed for a number of reasons. I think that if you look at most technology startups, you see people they experiment, they change direction, they try, it's called they dog food it. They want to see if the dogs will eat the dog food. Is somebody really going to want to use it? Here we had a business where well north of $1 billion went into building something for this giant crescendo launch, when this probably, because it was a new format, it was unproven in terms of consumer behavior. And by the way, there was video already for a short format, and that was called YouTube or Snap or Instagram. Already it was there. So we believe it was totally poorly conceived from the beginning. It had nothing to do with the pandemic. It had to do with a bad idea going into it way before it was even funded.
So what about video games? How, I know people in this household are playing video games more, hate to admit, but how do you see the video game industry shifting as we go into next year?
Overall, video gaming, so if you look at the business today, video gaming, we forecast that we'll end this year at $145 billion globally in video game sales. It's going to increase to almost $200 billion in the next 4 years. But videos, what's even more important is video is going to be the next technology paradigm, similar to a lot of the previous waves. Search, social, e-commerce, mobile apps, messaging. Gaming is going to fundamentally change the way that people interact with each other. So many of the activities that you would have done on the web, you now will do inside of gaming, whether it's search, social, virtual theme parks, music. So if you look at the Travis Scott concerts and the others, Marshmello and Deadmau5 that took place on Fortnite, there's so many different activities that are taking place. And there's something else that's really interesting that relates to the big tech platforms. All of them are trying to fill out their space in the gaming tech stack. And interestingly, of the US ones, the one that has the most is Microsoft.
And Microsoft, of course, has Xbox. Always glad to hear your predictions, Michael. We'll see what happens in 2021. Michael Wolf, Activate co-founder and CEO. Thanks so much for stopping by. Coming up, a blow to the gig economy in California. We're going to look at why hundreds of millions of dollars are at stake for companies like Lyft and Uber. Next, this is Bloomberg. Proposition 22, a ballot measure in California that would save the gig economy hundreds of millions of dollars, is up for vote on November 3rd. The prop is even more important as an appeals court ruled today that companies like Uber and Lyft must treat their drivers in California as employees instead of independent contractors. With us now for more, our Bloomberg Tech reporter, Lizette Chapman, who covers Uber for us. So this is another blow. It certainly doesn't look good for the ride-hailing companies here. What does this latest ruling, Lizette, actually mean for Prop 22 and AB 5?
Well, it really just ratchets it up. Like, I didn't think it could get any more intense. This is the most expensive ballot measure in the history of the state. And what this court ruling does is it upholds a lower court ruling from earlier this year saying that they must comply with AB 5. So this was kind of like their Hail Mary right before the Prop 22 vote. Of course, if Prop 22 fails, there is still the possibility, and Lyft did tell Bloomberg that they are considering appealing it to the California Supreme Court. But again, this is not going the direction that the gig companies wanted.
Meantime, you have drivers suing Uber over pressure that they say that Uber is putting on them to take a stand on Prop 22. Uber, in a statement to us, said this is an absurd lawsuit without merit, filed solely for press attention and without regard for the facts. Their position, it can't distract from the truth that the vast majority of drivers support Prop 22. What do we know about voter sentiment right now on Prop 22? Are voters generally in favor or no?
Well, the latest poll that we've been able to see is from the University of California at Berkeley, and they found it was really neck and neck. It was really too close to call. The margin of error did not exceed, the difference between the yes and no. What we do know is how desperately and important this is to Uber and Lyft that have been sued over not implementing an earlier state law to make their drivers, employees, and how important it is to Instacart, DoorDash, and Postmates as well, all of whom have contributed to the Yes on 22 campaign for $189 million. That's compared to the labor groups that have cobbled together $16 million. So it's really quite a difference there, and it really speaks to how important it is to these companies, to make sure that their labor model isn't upended. To your point, that there was this extra, lawsuit filed around what drivers said was political coercion in the workplace. And what was happening was that Uber was sending these in-app messages to drivers saying, promoting that they vote yes on 22. And the way that it was set up within the app, they had to confirm that before they were allowed to go through and accept a ride. So it created some concern that resulted in this lawsuit. There was a separate action as well.
Interesting.
There was a separate action as well with the No group, the No on 22 group, pointing out that the Yes group had used nonprofit status for all of their mailers, which they say unfairly put the public on the hook for an extra $1.5 million. So, there's a lot of back and forth. There's a lot of intense last-minute lobbying and pushing back and forth between these two groups.
Well, certainly another big one on Election Day. Bloomberg's Lizette Chapman, thank you so much. All right, Bitcoin surging past $13,000 for the first time since July of last year. This after PayPal announcing it'll allow customers to use cryptocurrency, the news sparking an exuberant response from crypto fans and hinting toward a wider acceptance by old school financial mainstays. I spoke earlier to Mike Novogratz, who runs Galaxy Digital, about what it means for the future of crypto.
One of the reasons Bitcoin didn't go so high is it's hard to buy, right? You can't call Goldman Sachs, you can't call JP Morgan, you can't call Bank of America, you can't call E-Trade and say, buy me some Bitcoin, right? And so where most of the wealth is in America, right, 45 to 80-year-olds, the baby boomers and the next generation, they're not used to logging in on a Square app or on a Coinbase wallet, right? They call their brokers. And so what I'm seeing at a rapidly changing pace is more and more infrastructure being put in place to allow easier access to buy, right? We just, with PayPal, it's a huge step in how easy it is for people to buy and sell crypto. You're going to see E-Trade come next. You're going to see the credit card companies, Visa, MasterCard, and then American Express. They're going to, I would bet you within a year, offer a platform where their 30 million merchants can transact in stable coins and crypto.
Meantime, Bloomberg is reporting that PayPal is in talks to buy the Bitcoin custodian BitGo, which is a company that I know you are a big investor in. What is the latest on that?
Well, listen, I don't think they're going to tell me if that's happening. What I would tell you, we have a banking business here at Galaxy, and you are seeing a complete uptick in the amount of inquiries about consolidation, right? If you think about PayPal, right, they're a tech company, yet they needed to bring in Paxos to do their Bitcoin integration. And so there's a lot of domain expertise and knowledge in the crypto community that's been built over the last 7, 8 years that the legacy community, even the tech guys, need some of. And so there's going to be a war for talent. There's going to be a war for companies that are building infrastructure. It's going to suck in talent. And so really exciting time to be in the crypto and blockchain space.
Okay, so let's talk about the state of broader M&A and IPOs in the crypto market. What are you expecting to see? Who's going to be making big moves?
Listen, there are not that many giant players in the crypto space. So Coinbase is a big player with a big valuation, right? They've got the most clients in the US. And so it wouldn't be surprised to see players like Coinbase making moves. But I think it's going to be outsiders, right? The credit card companies, other banks that are all going to be looking at, can I get involved in and around the crypto space? And so you'll see some internal consolidation, but a lot of external buying, putting footholds in. It's no longer a debate if crypto is a thing, if Bitcoin is an asset, if the blockchain is going to be part of the financial infrastructure, right? It's not if, it's when. And so every single company has to have a plan now.
Now, I got a quick question for you from a terminal user asking, why do you think Bitcoin will keep going up with PayPal in the market? Because the more Bitcoin is used, the more PayPal and others are natural sellers. Doesn't that mean the price could then go lower rather than higher?
Listen, to be honest, I don't think Bitcoin is going to be used as a transactional currency anytime in the next 5 years. Bitcoin is being used as a store of value. People are worried that the central banks around the world are debasing fiat currencies. And even as we switch to a digital dollar, which is coming, right? Facebook's got Libra coming. Lots of stable coins are going to be issued here in the United States and abroad, right? Don't forget, China is way ahead in issuing this stable coin. So quite frankly, it's a national security threat if the US doesn't get a digital currency. And so we're going to get a digital currency, but if the central banks keep printing more digital currencies, you're still going to see a debasement. And so Bitcoin as digital gold, is just going to keep going higher. More and more people are going to want it as some portion of their portfolio. And as it's easier to buy, because you can buy it on PayPal, the price is going to go higher.
My conversation there with Mike Novogratz, Galaxy Digital founder and CEO. Still ahead, could it be a wake-up call to billions of users on social media? Part of our interview with some of the Silicon Valley veterans and stars from Netflix's hit, The Social Dilemma. Next, this is Bloomberg.
This is the bigger risk to the company, in my opinion, having been through it. If you look at what happened, IBM's suit went on for about 10 years. Microsoft, I believe, was closer to 12 years. These things don't end early or quickly, right? Normally, unless you just settle, then you ought to just settle, right? But here's what happens internally. You miss innovation cycles. That's what happens because you're distracted by the suit and you're constrained in your innovation.
Former IBM CEO Sam Palmisano there explaining what Google stands to lose in the antitrust action against it. He is one of the guests on today's edition of Wall Street Week with my colleague David Weston tonight, right after this show, 6 p.m. Eastern. Well, The Social Dilemma is Netflix's hit film, which explores the multifaceted impacts of smartphones and social media on society. The documentary seems to be an effort to send a wake-up call to Netflix's audience around the world. It features some of Silicon Valley's veterans who I recently sat down with to talk about the glaring issues of social media and whether their creators, including Mark Zuckerberg, Larry Page, Sergey Brin, what their responsibility is.
His understanding is absolutely not keeping up with the impact that his technology is having on the world. And I think the best illustration of this is the election happens in 2016. Facebook, in a number of ways through bad actors and algorithmic bias, tipped the election. A month later, he's asked, what do you think about that? He thinks it's preposterous. And 2 years later, he acknowledges the impact, acknowledges that Facebook likely did tip the election, and then apologizes in front of Congress. But that's 2 years later.
Tristan, what do you think about Mark, about the Google founders who've recently left the company? Are they bad guys?
I think I agree with Tim that there's a lot of negligence. Each company is different and the personalities that are involved are different. I think that even if they were as enlightened as they possibly could be, when they speak, they sound like hostages trapped in a hostage video, where nothing that a hostage is saying makes any sense until you see the person off stage holding a gun to their head, which is their business model. I would say Jack Dorsey appears to be trying to do the best that he can, but in a very, very complex and unfortunate circumstance. And so that's why we actually need a global cultural movement to address these problems, because the state has to bind the market. This film is exciting to me because it's the first time that we have 190 countries and 30 languages, I think, all becoming awake to these problems at a massive scale.
Now, Sophia, here in Silicon Valley, we often glorify the founders of these companies. As a Silicon Valley outsider, how do you think we can hold them accountable?
I think that we've got to have big time structural intervention. It's going to require regulation. It's going to require repatriation of the trillions of dollars they've made off of making these problems and putting them back into the systems that can actually take care of our society. We can't be so dependent upon this sector or its leaders.
Tim, I'm sure you're still friends with a lot of people who work at these companies. How have
less and less, it seems like.
But how have your former colleagues reacted?
I don't think fundamentally anyone is a bad person who works there. I do believe they're negligent. I think they fundamentally believe that their platforms are doing net good in the world. And so they look for the data that reinforces that.
Now, you have had your critics. Brooke Hammerling, a tech communications veteran, said of a number of the folks interviewed in the film, most of them made a great deal of money from the companies they're now criticizing. I mean, they made plane money, guys. She means enough money to buy a plane. And while when you have a G5 at your disposal, it's really easy to sit there and criticize. I asked then, why not give a bulk of your wealth away to fight this, to undo the damage you yourselves helped create? Tim, I'm sure you made some money in that decade. How do you reconcile that?
I think it's really fair criticism. I hadn't read Brooke's exact statement. I've put $10 million plus into this issue, and we've given away millions of dollars to nonprofit organizations that are helping around these issues. And our intention is to keep giving away a lot of money, and a big chunk of the money that we made from these platforms. So look, I think it's really fair criticism.
Let's say Mark Zuckerberg wakes up tomorrow and says, I'm done. Shuts down Facebook, no more Facebook. What happens? Is the world better or worse off?
I think it would be perfectly fine for Facebook to shut down. I'm on the real Facebook oversight board. You know, I think we're really interested in seeing some important interventions happen quickly before democracy continues to collapse as we pummel towards the next presidential election in the United States. But, you know, I think it's more complex than just saying Facebook should shut down, although I think there are many, many people who would agree it probably should. But if we stay on the current path where there's no oversight, no regulation, no law, no responsibility, we can be guaranteed that this is just the tip of the iceberg.
So what should the laws be? What should the government do? If these companies aren't going to change on their own, then should they be broken up? Should there be new laws?
I look at the amount of regulatory reform that we need here as being on parallel with the financial crisis, in the sense that in the financial crisis, where you had thinner and thinner slices of sort of junk bonds being sold as if they were, you know, high quality bonds, leading to a full-scale house of cards collapse. I think we've been selling thinner and thinner slices of junk attention assets, fake attention, sold for fake clicks to fake users with fake reporting to advertisers. And we have an entire sort of democratic collapse sitting on top of the fact that this has been a predatory economy that has based on high risk activity, recommending random things to users you don't know and you don't speak the language to, leading to a genocide. So I think if you think about the scope of reform, we're not just saying let's pass this law or that law. We're saying how do you get something more like Dodd-Frank, comprehensive, humane technology reform? How do you have comprehensive reform that enables competition, has more transparency, accountability for harms, tax justice, as Sophia was talking about, repatriating some of the money back into institutions that have fallen apart, and have that all add up to a system of technology that reports to the people as opposed to reporting to the board of directors, and have them work in the service of people.
You can watch our full conversation on the latest episode of Bloomberg Studio 1.0, debuting tonight, 7 p.m. in New York, 4 p.m. here in San Francisco. Have a wonderful weekend, everyone. This is Bloomberg.